Visit our sponsor, Powerful Products, at powerfulproducts.com right now. Click the link below. Hey everybody, I'm Christopher Green. You're tuning in to AMTV, Alternative Media Television. It is, of course, February 26, 2014, and your daily dose reality check. Stock markets moving about 30 points in the positive on the Dow Jones Industrial Average on 0% interest rates and easy credit, creating larger, more aggressive bubbles than we ever saw pre-crisis, pre-crash 2008. Dow at that stellar 16,000 number. I think it could actually go higher, especially in the short run. We could see as high as 17,000, 18,000 on the Dow before the bubble pops. And again, we have another meltdown like we saw with the dot-com boom in the 2000s, or we saw in 2008, with pretty much every major financial institution in the world going to zero and then being bailed out by the same government agencies paid for by taxpayers that caused the collapse in the first place in order to transfer trillions of dollars of wealth from the middle class. But your daily dose reality check is mortgage applications at their lowest level in 2 decades, in over 20 years. Absolutely stunning considering we have record low interest rates right now. The 30 years at 4.5%. I mean, that's laughable. The 10-year bond is at 2.6%. I mean, we're literally at zero. This is as good as it gets. This is as good as this 0% funny money credit gets. And here we are with mortgage applications at their lowest level in over 2 decades. Also, a very sexy but telling reality check chart here, seasonally adjusted mortgage purchase index, showing how mortgage applications fell to their lowest level since 1995. Now, again, there was a lot of investor demand that artificially, again, spurned this recent rally, which has been the most aggressive real estate rally in residential real estate prices across the country since 2005 on a year-over-year adjusted basis. Of course, there was a massive financial crash after that, and millions of people lost their homes to foreclosures, etc., with the real estate bubble and the stock market bubble deflating. So this is where we're at. Record low interest rates and mortgage applications at 20-year lows, and a housing market subsiding. Now that the investors have, again, raped and pillaged the easy credit at the Fed, multi-billion-dollar companies, REITs, those real estate investment trusts that can borrow at zero, now that they're finished raping and pillaging the 0% at the Fed window, mortgage applications from real buyers, first-time home buyers, and real people in general are pretty much just non-existent. 20-year low, falling to their lowest level since 1995 at record interest rates, at laughable 2.6% on the 10-year, at a laughable pretty much zero on the 2-year, at 1.5% on the 5-year. Of course, B of A still under massive probes, being probed up the rear end, up the you-know-what since 2008 after receiving trillions of dollars from you. In fact, they want to thank you, taxpayer. Thank you for the trillions that they extorted from you. They're very appreciative of it. Since they didn't have to go out of business, they could actually steal from you. But they're still under probe for billions and billions of dollars worth of scams and phony lending and selling totally defunct and worthless paper mortgages to the federal government. Freddie Mac, Fannie Mae, also two insolvent government entities at the moment, paid for you by taxpayers, still under investigation, paying out billions. So it is a very positive thing to note here. In fact, there was a comment here that I thought was pretty telling. It says, okay, the banks made fishy loans and the Fed insured them. Every homeowner in the United States lost equity. Many lost homes. The economy tanked, so we fumble around for a while and the Fed bails out these banks. The banks recover, the banks get sued and have to pay the government. Interesting. The government caused the problem by not reviewing loans. The banks caused the problem by making bad loans. The banks get money, the Fed gets money, and years later, I still lost money and I'm still paying for an underwater home. Well, at least the banks and the Fed are doing okay. That's all that matters, I guess. That pretty much says it all. And the question you need to ask is, what happens, again, when the bubble pops for the second time? Just like 2008, when 16,000 goes to 5,000, 6,000, 7,000 on the Dow. When the housing market collapses by another measly 50%, loses half of its value again. Where is the Fed going to move? what are they going to do? I mean, rates are already at zero. They're already fake tapering the $85 billion a month in purchases. What are they going to do? Do they have any room to move? I mean, even Jim Cramer, who has the same track record, or probably worse, than a horrible weatherman that, told you to buy companies like Bear Stearns right before they collapse, is telling you to sell out of the market right now, saying that he's concerned about recent price target increases doubling at companies like Tesla and the tech industry in general. So this is where we're at, America, just giving you your daily dose of reality, the daily dose of truth, a bubblicious market, just bubbling up to the top on 0% interest rates once again, with again the real data, the real statistics and information showing you things like mortgage applications being at their lowest level in 2 decades. Where's the recovery? Because I thought we were in a recovery. It turns out there actually is no recovery for real people, just billionaires, major institutions, and banks that honestly pay billions in settlement charges, but it's really not a big deal because, remember, they receive trillions from you, trillions of dollars from you. So B of A and others want to thank you for your trillions of dollars, and really they're just going to kind of slough off any of these fees. I'm Christopher Green. Get it out, make it viral. Peace.